Hi, it's Larry Gaines, the Daily Aftermarket Outlook for Wednesday afternoon, September the 18th. Well, the Fed surprised the markets today, and the market was expecting to see at least a 10 to 15 billion easing of the quantitative easing, so tapering, so pulling back from the 85 billion per month of the buybacks to, reduce that by 10 to 15 billion. So what the Fed did was left it unchanged, which was very unexpected and very bullish for a number of things, equities, gold, bonds, so forth. And so you can see that right at the announcement, you can see how the equity market for the NASDAQ 100 shot up and went right up to this target zone that we had at 1272 and then pulled back. So this is a 1272 extension from the high that was set on the 16th to the low of this week down at 3154. So an extension from that high to low gave us 127.20. Then the next target will be 1618, which will be 3248. So that's the move up. You can see it just exploded up on the NASDAQ, and it did the same on everything. Here's the S&P futures. So exploded up to the upside on the S&P futures, hit our target here of the 1272 extension. So the next target after that will be the 1618 up to 1754. Now you can see we're in a compression squeeze here, and we could see a little bit more pullback. What you want to see tomorrow is how much of this move up does the market hold. So what you would do here is you would just do your Fibonacci from this breakout point to the high and see how much of that will hold tomorrow. So let's take a look at that. So you get your Fibonacci drawing tool here. Let me get that. Put it in here. So I'm just going to go from where it broke out right here all the way to the high right there. And then what you want to see tomorrow is how much of this move does the market hold. So a real strong move with commitment to the move would be if it holds here at the 236, which comes in at 1717. It'd still be a very strong commitment to the move if it pulls back to the 382, 1713. And it still would be decent at 1710. So these will be the support zones for tomorrow on the S&P future: 1717, 1713, and then 50% retracement 1710. You want to see it hold at least the 50, preferably the 382, and that's a very strong commitment to the move. Now the other market that really got a big pop to the upside was the gold futures. So with the dollar getting hit hard, quantitative easing staying in place, there's a big, oversold situation here to begin with on gold. You can see how it was sold down to 1291, and that was today. And then when the Fed released the news right here at 1 o'clock Central, it exploded to the upside and made a new high up here at 1367.80. So it came right back up, back above the critical moving averages here, and right into this resistance area right there. So huge move to the upside. So tomorrow you want to see how much of this move it will hold. So again, you could just use your Fibonacci level numbers to do that. So let me show you how that would work. So just get your Fibonacci drawing tool out here and go from where it broke out at 1 o'clock right here. Go to the high. So what you want to look for is to see if it can hold in here the 1354 or at least 1345 on gold. Now here's a quick look at the dollar. You can see the same dollar collapsed as soon as the news was released and pushed to the downside. So with the weaker dollar, it really pushed the gold markets up to the upside, really to an extreme level. But there should be follow through again. So that's a very, very key component here. Dollar lower, gold, and some of the other commodities higher. Now the other big benefactor of this surprise move or non-move by the Fed was the 30-year Treasury bonds. So as the price of bonds go down, that pushes interest rates up. So here, the market was expecting nothing to happen. Surprise move, shot the 30-year bonds straight up. So you had a huge move to the upside on bonds, which pulled back the Treasury yield. So I hope this helps. And what you need to do when you have a Fed meeting is a lot of times the real impact is not really felt until the day after. So this is going out, the daily aftermarket outlook that we put out each day. This is going out on Wednesday afternoon, but what you want to see is how the market responds tomorrow, Thursday the 19th. So good luck trading. Talk to you on the next video.